What can go wrong for President Biden?
Well, I think, first of all, you have to look at the virus, because the virus dictated the downturn, and it will dictate the pace and the shape of the recovery as well. And there are some positive signs. We've managed to address some of the snafus in the vaccine rollout in the U.S. at least, but certainly not globally. But there are, of course, these new variants. The UK variant is showing some new mutations that look like they might be slightly vaccine resistant, and there's plenty of opportunity for more mutations to happen before we reach herd immunity. And so if we need a higher herd immunity in order to address this virus, or if it becomes vaccine resistant, then that should certainly have an impact on growth. But secondly, I think there's a real distinction between excess savings, which we absolutely have, and pent-up demand. And I think the consensus is that we'll have a widely distributed vaccine. It will release a whole bunch of pent-up demand, and we'll be off to the races in the second half of this year. The second half of this year part, I think, is really dependent on the vaccine, so that's a risk. But also the pent-up demand piece is a risk too. First of all, we've already cut rates to zero in March, and so all the interest rate sensitive sectors like housing, auto loans, they've already rebounded, and some of that demand looks like it might be tapering off. So usually those sectors drive a recovery. That might not be the case this time around. And moreover, there's all kinds of scarring. You can see it all over the labor market. The number of long-term unemployed people has skyrocketed. It's more than doubled in the past couple of months. The number of permanent unemployed has exceeded and eclipsed the number of temporary unemployed. So the labor market is certainly healing, but there's a long way to go, and it was always going to be much easier to heal the labor market at the beginning of the recovery than further on along in it. And so I think some of this scarring could offset some of the pent-up demand that investors are hoping for.
Megan, there's a lot in there to unpack. I want to go to the savings rate and how the pent-up demand might not be the way that people think it is. And I want to go to Jared Bernstein, what he was saying, which is this savings may go toward paying down some of the debt that's been accumulating with rent deferrals and other put-off bills. How much credence do you give to that theory? In other words, we're not going to get that much of a spending boom as people think, because money is going to go toward what's put aside in the meantime.
I think that's absolutely right. So the U.S. economy has fared much better than most economists expected through this crisis, and it's partly because of stimulus measures, but it's partly because of forbearance. There has been an unbelievable amount of forbearance on the corporate side and the individual side. Eviction moratoriums is a great example of that. And so once those expire, even if you get checks out to people, a lot of that is going to go into paying down debt that they already owe. I mean, individuals in particular will face balloon payments once these moratoria expire. And so I think, we have to consider that a lot of the money is going to go into that. And so the size of this spending bill, some have said it's just way too big. The risks of providing too little are way bigger than the risks of providing too much, in part because of Jared's point.
Okay, this is really important because we've been conditioned by experience in the previous 12 months that when we reopen, we can snap back quickly. Do you think that conditioning, that confidence in the ability to snap back fast, Megan, do you think that's misplaced?
I do think it is. I think people will remain cautious for a while. I think our consumption patterns have fundamentally changed as well, and so that doesn't mean that we'll have necessarily a drag on demand generally, but I think there will be some kind of adjustment from sectors that we had been supporting before to sectors that we are supporting now. And of course, the labor market adjustment has to happen, and that doesn't happen quickly. A lot of these permanently unemployed people will need reskilling and retooling to move into new industries, and that doesn't happen just because we've all gotten a vaccine and we decide to open back up again. So I do think that, this idea that we'll just snap back quickly might be over-optimistic.
On the stimulus front, President Biden, Vice President Harris meeting with the Democratic senators about the stimulus a little bit later today. Just a final word on Payrolls Friday, Megan. Not on the street anymore, but it still applies to you. Your thoughts, what are you looking for this Friday when that payrolls report drops?
Well, I think the number is actually important, and I usually don't ever say that, but it's incredibly uncertain. So the number of new jobs generated will depend in part on seasonals. Usually you have a lot of seasonal workers who are laid off in January, but we didn't have that many seasonal workers to begin with this time around. So the range on estimates is incredibly wide. But I do think that we've seen evidence of scarring in the labor market with jobless claims. We've seen them tick back up, and so the non-farm payrolls number, actually the headline number will matter more than it usually does.